as you take a step back, we look at where the sector's priced today, what kind of returns you can expect over the mid to long term. We see things pretty attractively priced.
Joining me today is Raj Rehan, Head of Real Estate Securities of the Americas with BlackRock. Raj, thanks so much for joining us.
No, thank you for having me. It's great to be here at the REITwise conference.
And you were on a panel here that was looking at the real estate capital markets. How would you describe the overall health of the markets compared to recent years?
It kind of characterized them using like the word thawing, right? We've had this period of fairly limited activity, and the market certainly has began to thaw out. Now, when you look at the way we kind of frame what's going on, is you look at it through this 4-quadrant lens of debt, equity, public, private. It's really the public debt and public equity markets that are leading this defrosting that's occurring. And so, on the REIT bond, on the unsecured debt side, that market has been open, and spreads have continued to kind of tighten over the last 12 months. REIT equity, ATM issuance, and we saw our first IPO for a long time on the REIT equity side this year. And again, we're still a good 20% off the highs in the market, but we're 20% off the lows of last October. So health there. And then I'd say the most recent kind of early indicators, or it's an early sign, but the CMBS market also seems to be kind of showing some signs of life. So thawing, that's what I'd use.
And as the manager of one of the biggest REIT portfolios, how do you see REIT markets performing for the rest of 24 and into 25?
Yeah, so I think we have in the short term, REITs really get moved around by broad what's happening in equities, what's happening in fixed income, interest rates, and I think as you look at it, we have kind of the Fed meeting today, and we'll find out more this afternoon. But we are. We're a little we're of the view that the rate cuts that have been priced in, we may get less. We think we likely get June, but the risk is that we don't. And so, to the extent that gets pushed out, I think there's risk in the stocks. But as you take a step back, we look at where the sector's priced today, what kind of returns you can expect over the mid to long term. We see things pretty attractively priced. We don't see, we see a 4 to 5% 10-year environment as appropriate, and we see REITs priced for high single digit, call it kind of 9 to 10% returns over the mid to long term. You get 5.5% in terms of AFFO yield today, cash flow yield, and over the long term, a kind of a 4% growth rate in that. That's how you get to that 9 to 10, and we view that as attractive. So it may not be this calendar year, but you said kind of 24, 25, high single digit returns.
And finally, have you seen any change in investor interest in terms of REIT sustainability practices?
Yeah, no, I think they've been fairly consistent, and I think REITs have continued to progress in terms of sustainability practices. I think it's certainly a divisive topic out there in the world, within the country, but then as you look at different regions relative to each other, so it certainly has that. I think the main thing we're watching today, kind of more real time, is around the kind of SEC climate disclosure rules. Earlier this month we kind of had the rules come out. They're now facing kind of legal challenges. As they're written, most REITs kind of are already disclosing along the lines that the rules have been written. But again, time will tell as to how it makes its way through the courts and also through the election cycle, that'll have an impact.